Okay, good afternoon, good evening. This is Brian Sikorsky with Stratos Wealth Partners. Thank you very much for joining me today. Our topic today is long-term care insurance, and really we're questioning whether people are incorporating long-term care and long-term care insurance into their overall retirement plan. So we're going to talk about that today, and we're actually kind of broken up into two segments here. Number one is we're going to take a look at, if you want to call it a bit of a general information or a general knowledge base on the topic of long-term care and long-term care insurance, number one. And then number two is the second little piece. I'm going to actually go to a different presentation from one of the companies that provides long-term care insurance via one of the mechanisms we're going to talk about today. So, again, thank you for joining me. I'm an independent financial advisor with LPL Financial and Stratos Wealth Partners. I help individuals and small business owners make good decisions with their money. Okay, next slide. We're going to take a look at our agenda, and we're going to focus on some of the personal and financial issues that you or you and your spouse may face as you enter the retirement years and to help you prepare, hopefully, for the unexpected. This will cover what long-term care is and the risk of needing long-term care. When is long-term care insurance right for you? Some of the most asked questions, such as what is long-term care? What are some of the facts and the statistics behind it? And what might be the best solution for you individually? And finally, what are the next steps that you need to take if you want to address this as part of your retirement plan? Statistically, baby boomers and long-term care, we show here that about 10,000 of them will retire every day until the year 2030. And healthcare costs are likely to be among your clients' largest expenses, or that means my clients, I should say, in retirement. And only 17% of baby boomers have planned for their long-term care needs. Now, I remember I was born in the mid to late 1950s, and around that time, 50s and 60s, the construction and infrastructure that was going on when I was a kid was elementary schools. Kindergarten, elementary, maybe middle schools, but mostly, kindergarten and elementary schools, without a doubt, were, as they say, popping up everywhere. Now, what do we see? I'm here outside of Raleigh, North Carolina, and it doesn't seem like the month doesn't go by where I don't get invited to another open house type groundbreaking ribbon cutting for a new senior living community of some kind, independent, assisted, skilled nursing, or continuing care, CCRC. 73% of people would say they would not know what to do if they received a call today letting them know that a family member needed long-term care. 59% are uncomfortable even talking about long-term care with their family. I can personally tell you that my great-grandmother and my grandmother were both in a skilled nursing community. And my mom, when she was alive, would always say, whatever you do, don't put me in a home. I don't want to be in a home. I want to be in my own home. I don't want to be in a home. So the joke was, if she ever gave me any grief, I would say to you, hey, Mom, today I saw this really nice home today. She'd say, shut up. She didn't want to hear that. She wanted to be cared and taken care of in her own home. And so we look here, it says 90% of Americans have not even discussed long-term care topics with their spouses, children, parents, or, ta-da, their financial advisor. And why is that? Well, I think it's in some respects a little bit the same reason why people put off updating their will. It's almost like if you work on it and address it and recognize it and acknowledge that it exists, that it's necessarily going to happen, like you're going to jinx yourself. So ask yourself, are you between the ages of 40 and 80? Are you someone who has set aside funds as your just-in-case money? Are you concerned about what would happen to your retirement income? And are you concerned about who would take care of you if you needed extended health care? And are you concerned about protecting the amount of money you would need to leave for your loved ones? So if you answered yes to any of these, then long-term care insurance might be something appropriate for you. So let's talk about some of the most asked questions about long-term care planning. So there's a financial planning need that is coming more and more into America's consciousness, long-term care. You might have seen this topic in the news more lately, or you may know of someone in a long-term care situation. But what is long-term care? Well, long-term care is a type of care or someone in your family may need if you can no longer take care of yourself, either due to a physical, like here, chronic medical condition that comprises your ability to get through the most basic of daily routines, or cognitive, including Alzheimer's or other forms of dementia, which is a measurable decline in your intellect, comprising your ability to safely interact with your environment. And the operative word here is compromise. So you may have heard of the phrase activities of daily living. So these are the basically 6 plus 6.5 activities of daily living. Bathing, dressing, eating, continence meaning being able to hold your urine and others, toileting, transferring, or overlaying all of this, a severe cognitive impairment or mental deterioration. So first of all, to dispel one of the common misconceptions about long-term care is that care can be received in many different settings and not just in skilled nursing homes. Long-term care services may be provided in your home by a volunteer caregiver who can be a spouse or partner, family member, or friend, in your home by a nurse, home health care aide, or therapist, or a variety of long-term care communities such as assisted living or skilled nursing or memory care, or even to some extent independent living, where you're living in a senior community and having health care caregivers come into your home to care for you, maybe on a part-time basis. So what's the average cost of care per year, with the average stay in a skilled nursing community currently about 2.5 years. So in this, quote, nursing home or skilled nursing community, right now a private room will run about $87,000 a year, a semi-private room about $78,000 a year, or in a assisted living where you're not quite completely incapable of caring for yourself, $41,000 a year. With the average cost of home health care being at $21 per hour as of, this is actually as of 2012, so I'm sure it's gone up a bit since then. The average cost based on 40 hours of care would be $42,000, and an average need at 4.5 years could total up to $189,000. Even adult daycare cost is $70 a day, which would be about $17,500 a year. And we see here where previously we talked about the average stay in a nursing home of 2.5 years. Here we have the average length of care outside of a skilled nursing home could be upwards of 4.5 years. And this could be, in your home, independent living, assisted living, etc. So here are some, just a table of some averages here. These were we use the cost of care in Washington, just as an example. And you see here where the average cost, homemaker services and home health aides were around $50,000 a year, adult daycare $17,400, assisted living $51,000, and then skilled nursing between $92,000 and $102,000. The other key here too, I think, is that at the very right column you see where they're talking about 3 to 4% increases in these costs. They're actually, this was as of probably about 2012 as well, but they're definitely escalating. They're probably up in the 5, 6, 7% range now, which means they're going to cost more quickly. So who covers what? This is what really confuses a lot of people. You may think that you're already covered because, however, long-term care is not typically covered by health or long-term disability insurance. As for government programs, Medicare only pays for very short periods of care, meaning while you are transitioning from a hospital to maybe your own home through some sort of a rehabilitation community or facility. And Medicaid requires you to spend down your assets to just owning a couple $1,000. So if you have $100,000 saved up and you need Medicaid provided skilled nursing care, you're going to have to pay for that first almost 100, about 98,000 yourself before your Medicaid benefits, quote, kick in. So we see here that Medicare covers the cost of long-term care temporarily up to 100 days in a skilled nursing facility after a hospitalization of 3 days or more, after a 3 consecutive day stay under treatment in hospital, and after 20 days, the patient incurs $144.50 copay as of 2012. Medicaid requires a person to be indigent with $2,000 or less in assets, depending on the state. And Social Security does not provide any sort of funding for skilled care. What a lot of people confuse is Social Security disability, and that's completely separate. That's really not a function of long-term care at all. Considering the odds, what are your chances of experiencing a house fire? Well, 1 in 1,200. Your chance of being in a car accident, 1 in 240. And a chance of needing long-term care in the neighborhood of 1 in 2, so around 50-ish%. But once you get up to age 65, it's nominally a 70% chance you're going to need some kind of long-term care and or support. The 2012-2013 source book for long-term care insurance information provides us with some of this information here as an example that 81% of people purchasing long-term care coverage are under the age of 65. 56% of sales were to people 55 to 64. 22% of sales were to people age 45 to 54. So 40% of Americans who need long-term care are between the ages of 18 and 60. That's interesting because most people will think exclusively of elderly, but we're looking here at accidents and strokes and things like that. The other thing that's kind of interesting is I've not too long ago had a man and woman who were children of their parents, obviously, and they came in to see me and said they wanted to talk about long-term care insurance. And I kind of looked at them and said, geez, you guys are kind of young to be thinking about this yet, aren't you? And they're like, well, they weren't looking for us. We're looking for it for our parents. And their dilemma was their parents lived in a small town in Michigan where I was at the time. But each of them were kind of high profile executives. One was in executive, one was in government service. And neither of them lived within 2,000 miles of mom and dad. And both of them regularly traveled overseas to the Middle East, et cetera, et cetera. And they decided to buy a long-term care insurance policy for mom and dad so that if mom and dad became unable to care for themselves, and they were in Kenya, and the kids were in Egypt or whatever, Iraq, and couldn't drop of a hat, fly back home and take care of mom and dad for an extended period of time. This way, mom and dad were cared for, through their long-term care insurance. Most of the long-term care insurance companies now also offer this concierge service so that you call one number and they can direct you to all the different types of caregivers, oxygen tanks, wheelchairs, home health aides, et cetera. So they wanted to make sure that when the time came and if mom and dad needed care, that they were not unable to care for them. They couldn't do it themselves, so they're hiring their proxies until they can put their affairs in order to get home and help out if that's what they decide to do. It says here, it's a woman thing. I know, again, my mom, she is not in assisted or skilled nursing. She just went to a rehab community. She went to the hospital and then went to rehab for, just a few weeks and then went back home. And I was living out of state at the time, and we went up to see her, and I walked into this rehab facility, and I just happened to walk in at lunchtime, and I told the desk person who I was looking for, and she said, well, you're Mrs. Raskowski was her last name, is in the dining room. And I walked into the dining room and saw maybe 80 people, and they were all with their backs to me. And I realized that literally 95% of that people in that room were, as they say, white, gray-haired ladies. And I literally had to go around like, looking for your lost car in the parking lot. I had to go round and round, try to find my mom, because there were 95% of the people in there, about 95 people that all looked just like her from the back. Also says here, this is conversely, that 80% of men die married and 80% of women die single. Women represent 75% of all informal caregivers. And although 65% of women discuss their retirement with a financial advisor, only 1 in 10 discuss the possibility of long-term health care. It doesn't work for me because I won't let them not talk to me about it. I bring it up, as part of our normal review process. So the bottom line here is that planning is critical for women more so than than men, because they tend to live longer than men, making them more likely to be the caregivers to their spouses and less likely to have the same support later on when they really need it. Statistics show that the likelihood of needing some kind of long-term care is significant, and by 2030, the cost of a semi-private room is expected to be $265,000 a year. These costs are not covered by health insurance, Medicare, or other plans people typically assume will pay for these costs. Now, I got to tell you, I can't quite comprehend in my mind how we're ever going to have a scenario where somebody, whether it's Medicaid or individuals, are going to be able to afford $265,000 a year for nursing home care, semi-private room. You wonder if they're going to have to go back to like the old days where you had like 60 beds in one room, because I just don't see this as being sustainable. Another thing that a lot of people don't realize is, how airlines have set aside, seats. Some seats are frequent flyer seats, other seats are discounted payment seats, and other seats are full pay seats. And the same thing holds true if you go to a skilled nursing or an assisted living community in your area. You could have a scenario where that you have a skilled nursing community living right across the street from you, and you're now eligible for Medicaid, but you can't get in because the only beds they have available are full pay beds. Many of these communities will only set aside a subset of their beds for Medicaid paid individuals. So you go over there, there's 5 beds available, but you can't go in because all the Medicaid beds are taken. And this could happen if you were in a Medicaid bed in that community and then you had to go to the hospital and then you went to rehab and then you try to come back. Well, they're not going to wait for you. They're going to fill that bed, and now you get told, well, I'm using this area, Raleigh. I know you were in Raleigh before, but now the nearest Medicaid bed we can find is 50 miles away in Fayetteville. So, I kind of ask people to reflect upon any long-term care experiences that they've heard about. Who was it? Was it a family member, a friend? Where did it take place? How was it paid for? Who paid for the care? How long did that person need the care? And was the care expected or unexpected? And the other thing, too, is I remember I gave a public talk on this topic last year, and I told people to sit back and close their eyes and think about the last time they flew on an airplane in first class. Now think about that. I said, you're sitting there in first class. You can feel the nice wide leather seats, and you're drinking your champagne out of a glass flute, and you're having your nicely prepared dinner. And then think about that time when you're in the economy class in the middle seat eating your bag of peanuts. Well, I kind of jokingly say that's the difference between living or residing or receiving care in a community in which you have long-term care insurance, or a place where you're being provided your care based on billings to Medicaid. Because I think we've all seen, at least sometime in our lives, we've all been to some sort of government facility, government organization. Goodness, just look at our friendly DMV or post office. I know they're really stellar for their outstanding customer service. Well, that's the same level of care you're going to get in a government facility as well if you're receiving long-term care. So there are a variety of ways, there didn't used to be, but there now are a variety of ways to acquire long-term care insurance. It used to be the only way you could acquire long-term care insurance is number one here at the top, traditional long-term care. This is a plan that most people are familiar with. It's, I don't know if I'd call it most customizable, but it is definitely kind of like auto insurance. You pay a premium every year on the supposition that maybe somewhere down the road you'll have a need, like a car accident, and those premiums can go up. So that is what a traditional policy is. It requires medical underwriting. You have to have a medical exam. You can be turned down. Your rates will go up, and you will pay for the rest of your life. And if you never use the benefits, you lose them, just like your auto policy. You don't get it back. Well, now there's a couple of other ideas that have come out from different insurance companies, and those include some aspect of a combination of life insurance with a long-term care rider, or purchasing an annuity, whether it's fixed indexed, or variable, with a long-term care rider. So it's enabling these to be double duty. You know, the life insurance policy, let's say you need life insurance. You have some debts that you want paid off if you die. You want to leave some money to children or a grandchild. So you need life insurance. Well, heck, while you're at it, why not select this long-term care rider such that if, you know, you need long-term care instead, you can, quote, accelerate the death benefit and use a portion of that money to care for you in your long-term care community. Now, with life insurance policies like this, you'll either make a single one-time lump sum premium payment, or there's a couple of insurance companies that will let you pay over a 10-year timeline. But we're looking at, you know, probably $30,000, $40,000, $50,000. We're not looking at a couple $1,000. Likewise with annuities, let's say you've got some money, it's in a brokerage account, it's being taxed, you're getting 1099s at the end of the year saying pay this tax. Well, gee, take this money, move it to some kind of an annuity with a long-term care rider. It's no longer tax, you get tax deferral. It doesn't really require medical underwriting, it says simplified, doesn't require a medical exam. And you can get leverage on your money, meaning you can get typically in the neighborhood of 3 times long-term care coverage for what you invest. So if you put $50,000 in one of these annuities, you and your spouse, depending on which company we're talking about, either you or you and your spouse, would have 3 times or $150,000 in long-term care benefit. And the other good thing is if you never use it, you don't lose it. It would, any outstanding account value, not benefit value, but account value that was left over would go to your beneficiary. So that's pretty cool. So I'm a big advocate of these, without a doubt. And which one is which? Well, if you really don't have a lump sum of money, then a traditional long-term care policy is probably going to be your only alternative. If you've got a life insurance need, then life insurance or the long-term care rider would be a good fit, particularly if you want to be sure that at least some amount of money is going to go to your beneficiary. And then lastly, but not least, is the annuity, which may be your only choice because you can't get medically underwritten by either a traditional plan or a life with long-term care plan because you have some sort of health issue. So this is just kind of interesting, is that, you know, a number of years ago, we looked here at the old approach. It used to be that you would buy this individual plan, you know, one for you, one for your spouse. It would pay $6,000 a month for 5 years, had an inflation protection of 5% compounded. It would pay out $15,000 a year at age 80, but whammo bammo, your annual premium payment was $17,000 a year. Woo! So now that we talk about student loan debt, holy cow. You know, in recent years, and here we're talking predominantly about a traditional policy. We're looking at more shared plans now, where $5,000 would be shared between the two of you, instead of immediately going into some sort of skilled community. You'd maybe be cared for by a home health caregiver, so that you, instead of needing 5 years, you only need 3 years of skilled nursing care. 3% instead of 5% inflation, providing you $8,700 a month at age 80 with a premium payment of $7,207. And even more recently, people are just having to recognize that they're just not going to be able to afford to pay $7,000 to $17,000, and what they're going to do is try to have their long-term care policy only pay for some of their costs and not all of them. Therefore, paying you $4,500 a month for 2 years, 3% inflation protection, $78.91 a month at age 80, with a premium payment of only $4,700. I mean, just recognizing the fact that not everybody can pay for $7,000 to $17,000 a year. This is a horrible slide, but what it's telling us is some people will tell me, "Oh, I'll just save myself." Well, golly gosh, if we look here and we say that over a 10, 20, or 30-year timeline, we're going to put $1,500 a year into long-term care, you just might not have enough time. As we show you in a 10-year block here, you invest $1,500 a year, and the savings grow to $142,000 in 30 years, but it's just not enough. I mean, you would literally have to start saving for long-term care right after you got out of college to have enough saved up. So it's only through insurance that you receive that leverage of potentially more benefit than what you pay in initially. So why don't more clients buy traditional long-term care insurance? Well, again, that use it or lose it provision, premium increases, waiting and elimination periods, very expensive, and this mindset that I can insure myself. This kind of shows you the little bit of a diagram on life insurance with long-term care rider. Okay, so if you have that kind of premium payment and your long-term care, no benefits are ever used, that a death benefit is paid to your beneficiary. If the benefits are used, you use them to pay for qualified expenses. If there's anything left over, it'll go to your beneficiary. And the other key, too, is that if you change your mind, your doctor tells you got a month to live and you want to take a round-the-world cruise, you can take this money out. It's not like, use it or lose it. So it's there for you if you want it or need it. And this just shows the change to the Pension Protection Act that was passed that changed how withdrawals from an annuity were handled from a tax perspective. So it used to be everything that you kind of pulled out of an annuity was taxed. Now, if you divert some of that money to a long-term care policy, you can see that a much larger component of it is tax-free. This was passed in 2006, and then an additional change in 2010. So in summary, the likelihood of needing long-term care is significant. The cost of such care can be financially devastating. It's not covered by health insurance, not covered by Medicare after 100 days. Long-term care coverage is just another piece in the financial and retirement considerations. And pursuing long-term care insurance coverage may help preserve your financial well-being and provide a peace of mind for yourself. So what do you want to do? Well, you want to find out what coverage costs, see if your health allows you to qualify, ask what kind of discounts you might be eligible for, and remember that whether it's myself, your financial advisor, or an insurance representative, there's never any cost or obligation when you request this information. So we're going to shift gears here now, and we're going to take a look specifically at one of those annuity with long-term care rider alternatives. Okay, and we're back now, and in this time we're going to take a look at just an example of one alternative. And you can see that this is a upper left-hand corner. It says this is a fixed annuity. Now the other alternatives are fixed indexed and variable. Variable meaning that you pick your investments. Fixed index means that you align your performance with an index. and fixed is a little bit like a bond or like a certificate of deposit. It has a fixed rate of return and the assurance of not losing any of your original principal. So this is from a company called Global Atlantic, and the product is called 4Care. And you would really want to take a look at your own individual circumstance to determine if the fixed, like this, fixed indexed, or variable is the most appropriate for you. Because depending on which one of those three you're talking about, some of them have higher minimums, they have different maximum issue age, they have different medical qualifications, et cetera, et cetera. So you know, don't look at this one as being the be-all, end-all. This is just one example because I think it's the simplest, or easiest one to explain. So here's just this scenario. Rick and Sherry, 68, 62. They retire with $650,000 in total retirement assets. These 500,000 of them are in retirement assets, like a 401k, including stocks, bonds, and other savings. They have $150,000 fixed annuity, and they have no debt. They're comfortable with their retirement strategy, figure they got it all covered. Everything's perfect. But why is planning important? Well, because 5 years into retirement, Rick starts forgetting things and is diagnosed with Alzheimer's. Rick and Sherry had made the choice not to put Rick into any type of a skilled nursing home. Rick lives another 10 years while Sherry takes care of him, perhaps with a little bit of outside help. They spend $580,000 of their retirement on in-home health care, which is not impossible to do. The problem on top of it is, you know, the market drops and Sherry is left with only $70,000 of retirement savings that from where they were originally. And now she's 77. If she lives another 20 years, which is not impossible, she faces a very difficult decision. What does she do? And could this happen to you? Well, statistics have shown that individuals will be living longer and longer in retirement. And as our clients, talking from a financial advisor perspective, I think the need for and the probability of some form of long-term care is just going to happen. And over the age of 65, what percentage of people do you think will need some form of long-term care? Well, it's, you know, here's kind of some of the numbers they give you, and it just kind of depends on who you list, act, and what do they quantify as long-term care. You know, it can be 50 to 70%. So kind of what are the odds that you're going to be one of those, like that old story, you know, back in college, look to the left of you, look to the right of you, you know, the people on either side of you are going to flunk this class, and 1 out of 3 is going to pass, you know. So 70% of people over the age of 65, from this perspective, and this is dated 2010, are going to need some form of long-term care. Are you prepared to fund it? I'm going to go through these relatively quickly because we covered some of this in the kind of more generic or long-term care 101 at the beginning of this presentation, the beginning of this webinar. Just again, some numbers for homemaker services, home health aides, assisted living, semi-private, private nursing home, private room, excuse me. At this rate, 5 years at an assisted living facility will cost almost $200,000. We sometimes get from, you know, insurance companies, they send us these things and say, hey, sit down with your client and ask them, if you had an unexpected long-term care expense, where is that going to come from? So, as opposed to, like we talked about Rick and Sherry, utilizing their, you know, $600 and some thousand retirement nest egg on long-term care, what else can we do? Well, we can see here where, in this example, if they put in as little as 150, well, as little as 50,000, I was going to say, but here 150,000, they get this leveraging. So even like 50,000 may provide them up to 3x 150,000 in long-term care benefit. The approval is, and I'm going to run back to that again just for a quick second. So here's a scenario where if they look at these different investment buckets, they can realize that whichever one they tap into, let's say they tap into this fixed annuity bucket, just for example, and they do a tax-free exchange into this 4-care fixed annuity, whereas before they had $100,000 in the annuity but no long-term care benefit, now they would have $300,000 in long-term care benefit. Pretty big difference. Can you get approved? These are kind of the general questions that get asked, but I can tell you from the number of applications I've helped submit, it's almost like if you're in an assisted living community today, you may be okay. If you're in or partaking of some components of skilled nursing, you're probably not. So you can see here it says, have you been using oxygen, dialysis machines, hospice care, walkers, wheelchairs? So these are the kind of things that are going to knock you out. If you've got dementia, Alzheimer's, this is not like, hey, I broke my finger or I broke my hip. That's not going to preclude you. It's if you're taking on the characteristic of a person who for at least some period of time you want that person to be able to take care of themselves for a few years before they tap into their policy. So here's that little better way of taking, as an example, in this case, they took 150,000. They took the CD and the fixed annuity, popped 150,000 in, and now they have 2 to 3 times, depending on how they answer these questions here. Back here, there's like 2 parts to this. Well, if they answer no to all of them, they'll get a 3x. If they answer yes to a segment, they'd only get 300,000. So just diverting this money from where it already is in a savings account or a fixed annuity and just moving it to another fixed annuity, you get between 300 and 450,000 in long-term care benefit. Gee, that's like trading in, your old car and getting a new one for no money, really, when you come down to it. Oh, and this is the second half. If you can answer no to these. So if you answer no to all of these questions here, you are qualified. If you answer no to these questions, then not only are you qualified, but you also get a 3x as opposed to a 2x. So we're showing here 150 transforms into between 300 and in this case now 450,000 in long-term care benefit. It's a pretty easy application. It's height and weight, age parameters. Answer these like about 11 questions. If you're over the age of 70, they'll do a phone call with you just to make sure that they don't feel you have dementia. It's very simplified. There's no medical exam, blood draws, things like that. Here's our height and weight. So if I look at me, 5'9", I have to be at least 115 pounds and no more than 271. If you're age 70 to 80, you'll be given 10 words and asked to recall as many of them as you can. It's not remember all 10 of them, and there's no time limit. That's kind of interesting. It says writing and recording devices are not allowed. They do it over the phone. I don't know how. Anyways, you take part 2 in logic exercise involving word associations. And there's really no right or wrong answers. It's just showing that you have the ability to make decisions and to think through thoughts. If you do go, quote, on claim, you literally just call a claims number, just like an auto policy. This will be provided to you when you purchase the policy, and you can stick it on your refrigerator because it comes in the form of a refrigerator magnet. And once you make that phone call, you'll be provided a claim packet to fill out and return to get the process started. So this is just kind of showing how they've changed Rick and Sherry's life from having to eat up, 500 plus thousands of dollars of their savings and doing nothing more than moving CD and annuity money to another almost probably comparable annuity per se in terms of performance. And now they've got $450,000 in long-term care benefit. Again, this was brought about as a result of the Pension Protection Act. You've already seen this chart to show you how it works. You have more care than you could probably imagine in this case. It's much more convenient. You have control over your money. So again, more care giving you 2 to 3x. Very simplified application process and control of your money and how it's spent. Any leftovers go to your beneficiary. 95% applicant approval, 88% of the premium or 3x, 12% of the standard, which is 2x. And what would be your next step? Well, set up a meeting with me or your financial advisor to go through those questions, go through the 30-minute application process to see how much you can qualify for. Leave the appointment knowing you have more care with the 4Care product. Some other thoughts to take into account is that these monies can be used for home care, adult daycare, hospice, nursing home, assisted living, respite, nurse and therapist, home health aide, personal care, homemaker services, chore services. These are not all skilled. I mean, you can even pay money to use some of your money to modify your home or to pay for the training of a family member to care for you. You will reduce your long-term care benefit if you take withdrawals of your account value. You could be subjected to a 10% early withdrawal penalty if you withdraw more than 10% of the account value, not your benefit, not through benefits, but just if you decide to buy, a new TV. So this just shows that over time, particularly if you've got this premium benefit, not only did this person qualify, Rick and Sherry, for an example, for $450,000 in long-term care coverage, this is a fixed annuity that's also going to grow your assets. So, if you were able to park it in this annuity for 20 years, in this example, your $450,000 in benefit would grow to $601,000. If you don't need long-term care services at this time, well, that's, I guess, a good thing. But just keep in mind that, some of these costs that we're looking about, just home health aide, 3 years at $46,000 a year, just help with bathing, dressing, and doing the laundry, 6 years at $31,000 a year. Average of 5 years in long-term care services, including skilled nursing care and personal care. Not unlikely that you'd be needing to move to an assisted living community, $39,000 a year for 6 years, and then ultimately a skilled nursing community. So I think, again, here, private room, 6 years at an expense of $76,000. So I think the moral of the story is that now's the time, and again, I really meet with every client of mine, and we do have this discussion. And even if they decide not to purchase a policy, I'm fine with that. If for no other reason, at least they've made an informed decision, and they've made a decision when they're not under duress. So I would really like, again, everyone that participated in this webinar to please take it upon yourself to address this issue. Step up to it. You'll be surprised how good you feel after you get it behind you. Well, that's the end of our presentation here. I just brought you over here at the end to my website, BryantSikorsky.com. Very innovative there. This is my website, and here you can go and learn all sorts of different topics. You can read up on outlook for the market for the year, market and the economy for the week. You can sign up for my newsletter. Also, you see up here in the resources tab, you can read about different topics. Also, in the upper right-hand corner, you can see a Facebook, LinkedIn, Twitter, and access to my YouTube channel. And I'm just highlighting the YouTube channel because what I'm going to do is I've recorded this presentation, and what I'm going to do tomorrow is upload it to my website here, to my YouTube channel site, excuse me. So just go to BryantSikorsky.com, click on YouTube, and you'll be taken to this YouTube channel. You can see right here the one I did about 2 months ago, Women, Money, and Power. This is where it'll get moved to the right, and this is where the video that we just did will be posted. You can see other videos on other topics here as well that might be of interest to you. So with that, I will say thank you very much for joining me, Bryant Sikorsky with Stratos Wealth Partners. You have a great rest of your evening, and I'll look forward to talking to you soon. Thank you so much.